Good morning and welcome back to class. My name is Jonah Baycroft. In this section, you will learn purchases ledger control accounts. We take some practical examples of purchases ledger control accounts in combination with sales ledger control accounts. Without wasting time, grab your writing material. Let's dive in. What is purchases ledger control account? Purchases ledger control account is the account that tracks the total amount payable to creditor or the total payable to suppliers. That is what control accounts. Now let us concern ourselves from the sources from which information to compile the purchases ledger control account comes. The information to compiling purchases ledger control account comes from four books of prime entry. Four subsidiary book of accounts. The purchases day book, the purchases return day book, the cash book, and the general journal, or known as the journal proper. Now, the information we get from the purchases day book is total credit sales. That is number one. Information is from the purchases day book or the purchases day journal is credit sale. The information we get there is total credit sale. So the first information or the first item for purchases ledger control account is total credit sale, and this information is gotten from the purchases day book. The next thing, that's number two there, is return outward journal. The return outward journal gives us information about purchases return. So the second item for purchases ledger control account is return outward or purchases return, or at times called return on credit purchases. From the cash book, we get information like check pay to suppliers, check pay to suppliers, then cash pay to suppliers, that is number four. We can also get information also from a discount received from suppliers. We also get information from dishonored checks. These are the information that we get from the cash book. Then the next subsidiary book we get information is the general journal, otherwise known as the journal proper. We get information like bill payable. We get information like contra entries, that is set off 8 contras. Then we get information like interest charge on overdue accounts. That is when the business fails to pay certain amount owed, that the supplier may charge interest. Then the last information is bill payable dishonored. That is to say, from 1 to 10, total credit sales, return inward. 3, check to supplier. 4, cash to pay to supplier. Discount receive, discount check, bill payable, contra, interest charge on overdue account, and bill dishonor. Bill payable dishonor. These are all items of the purchases ledger control accounts. Now we are going to take a look at the format of the purchases ledger control accounts. Purchases ledger control accounts formats. The purchases ledger control account is a current liability account that takes increase by the credit side and decrease by the debit side. So in this account, anything that will increase this account will be recorded by the credit side, and anything that will reduce it will be recorded by the debit side. So the first thing is the unit of account. We are going to put the unit of account, in this case is in Naira. Now, balance of credit purchase brought from previous period is the first thing by the credit side, because this account take their balances from the credit side. So balance brought down is credited to this purchases ledger control accounts. Then the next thing that will be increased this account is credit purchases. When we buy more credits, then that one will increase it, so it will be recorded by the credit side. Then if there is dishonor check that have been previously issued and dishonor, will also increase these accounts. You have interest charge on overdue accounts can also increase this account. That is, everything that will increase the account is recorded by the credit side. Be payable dishonored is also increase this account. Be that have been accepted and later dishonor will increase this account. So it will be by the debit side. Then by the other side, that is by the debit side, it is unusual to have balance brought down. But anytime there's balance brought down at the debit side, it indicates refund to the business. This is amount that the business have overpaid the suppliers. This comes as a result of overpayment of suppliers. The business is owing the supplier and they pay more money to the supplier. So that balance by the debit side is a current liability to the business. Discount received will also reduce it. Bill payable will reduce this account. Then check paid to supplier will also reduce what the business is owing to the suppliers. Another thing that will reduce it is return outward, that is purchases return. Purchases return will reduce it. Then the next thing is sales ledger contra. That is set off. Set off is always in the reducing side of the accounts. Then the balance brought by carried down, that is to take the total of the two sides and use the balance carried down and put it in the lower side. That balance carried down in the red color is the actual balance of payable. While this balance carried down in blue color is as a result of the overpayments made by the business that have not been settled. So you add both sides together and bring down the balances as they occur. The total XX this way also, then you balance off. Now, when you balance off, you bring the total, balance brought down. Then the balance brought down that will be by the credit side is the actual amount of payable. The balance brought down that will be in the debit side will be as a result of overpayment, as a result of sales, purchases return. For instance, the balance brought down by the credit side now is the actual total of payable in this period. That's the balance brought down by the debit side. That balance brought down by the debit side in red color. Then the balance brought down in blue color by the debit side is as a result of what? The overpayment or overcharge, or as a result of purchases returned by the business to the supplier that have not been settled. Yes. This one by the red side and by the debit side is total payable. Is total payable. As I'm writing it, total payable, the one by the credit side is total payable. While the one by the debit side, that is balance brought down by the debit side, can be caused by one, overpayment. It's an overpayment. The business have overpaid the supplier some money and they are here to supply some of these goods, or can be as a result of what? Purchases what? Return or return outward. This point should be clearly what? Noted. Now let us take a practical example. You say, draw up a purchase ledger control account from the following. Balance brought down 1st June 2024 is 3,800. Total for June, purchases balance is what? 5,640. Purchases return 315. Sales payable to payable is 5,230. Then discount received is 110. Then what is the purchase ledger balance? Solution. Now, from this information we are going to post. To the what? Purchases ledger control accounts. We have the debit, we have the credits. Now the first information there is balance brought down June, which is what? 3,890. And that one is going to be by the credit side. Balance brought down is to be taken by the credit side. Balance brought down is 3,890. That is one. Then the next item is purchases journal. That is total purchases 5640. Purchases, credit purchases for the period is 5640. Then the next item there is purchases return. Yes, purchase return is 315. It reduces the amount to total payable. Then the next thing there is cash pay to supplier. Is also will reduce the amount payable. Then discount receive or purchases return is there. Then discount receive we also reduce it. Now this purchases return is entered twice. So let us delete one. We are going to delete one. So we go. We are going to delete one. Okay. Then when we total, we now have balance brought down as 3,875. Question 2. Use this data from XYZ Limited to answer these questions. On the 1st of May 2025, payable balance is 13,400 credits. On that same date, payable balance was 150 debits. Purchases for the period is 114,512. Return outward is 11,000. Interest by supplier is 1,002. Check to supplier is 17,800. Discount received is 1,420. And balance brought down 150 on the debit side. So the same thing we are going to do. We are going to do the same thing. We are going to post them. We are going to post them. Now the first balance is, the unit of account is dollar. So the first balance is balance brought down by the credit side, which is 13,400. Then the next thing we are going to post is balance brought down by the debit side, which is 150 by the debit side. That one is actually to be refunded toward the business. Then the next thing we are going to post there is purchases on credit, which is going toward the credit side. Purchase on credit, that amount is 114,512. The next thing we are posting is return outward. Return outward. After return outward, say interest by suppliers. That one will increase the amount we are owing. Then discount receive reduce what we are owing. Then interest charge on account by suppliers. Check by suppliers is already posted. Then discount is there. Then balance brought down by the debit side is the difference between the debit side and the credit side. That is the actual amount payable. Then you also bring out balance brought down in the question on the debit side. Then when you total the two, you will still have two balance brought down. The balance brought down by the credit side is the total amount payable, while the balance brought down by the debit side is a current asset to the business, which amount that is refundable to the business, because that amount comes as a result of the business overpaying some of its supplier, and it has not been supplied goods, or as a result of purchases what returns. Any question? So the balance brought down by the debit side is a refund to the business, is a current asset to the business, while that on the credit side is the actual total amount of what payable. Now, this is another question. At the close of business on 31st May 2023, the following balances were extracted from the book of Accrual, a limited liability company. See, during the month of August 2023, the following transaction occurred. Cash received from customer is 63,600. Cash paid to supplier is 65,000. Credit sales is 36,400. Our purchases on credit is 73,000. Sales return is 3,800. Then purchases return is 1,400. Discount received from supplier is 800. That is number 7. A settlement discount claimed by a customer who was not expected to do so is 600. Then irrecoverable debt written off is 5,400. Then number 10, a customer and supplier account settled by contra is 4,200. You are required to prepare 1. At the sales ledger control account. 2. Purchases ledger control account. So 1 is sales ledger control account and purchases ledger control account. Then question 2. Each of the items marked 1 to 10 above identify clearly the book of prime entry from which the transaction originated. Now, what you will do in this question is to first of all identify all the items that are for sales ledger control accounts and all the items that are for purchases ledger control accounts. After identifying them, then you start sales ledger control accounts and use all the items that are for sales ledger control account for sales ledger control account and all the items that are for purchases ledger control account for purchases ledger control account, and that is all. So the first thing to do is to identify transaction, the one that is going to sales ledger and the one that is going to what purchases ledger. From this example now, all the transaction that is marked green are for sales ledger control account. For instance, the first one there, receivable ledger balance account, that is 95,200 for sales ledger control account. Number 1 there, cash received from customer is for sales ledger control account. Number 3, credit sales is sales ledger control account. Number 5, sales return, the one that I'm going to mark now, is sales ledger control account. Number 8 there, settlement discount claim by a customer who is not supposed to do so is sales ledger control account. Then number 9, irrecoverable debt written off is also sales ledger control account item. And of course, number 10, which is contra, is both sales ledger control account and purchase ledger control account, and they must appear on the reducing side. That is every other transaction in deep blue color are purchases ledger control account items, like payable control account balance 74,800, and all the rest of them that are in blue color are purchases ledger control items. So what we are going to do in this question is that because we are not going to go back to that slide, as we are going to prepare the sales ledger control account here, we first of all bring out all those transactions that are meant for sales ledger control account, so that there will be no communication gap, so that as we are posting them, you will know what we are doing. We bring them and assemble them in one side. That is transaction 1. Transaction 1, 3, 5, 8, 9, and 10. We are going to bring them out here, so I will continue to post them so that you flow with us without distortion. Now let us bring back those transactions. Transaction 1, 3, 5, 8, and 10. The first one is balance brought down, which is 98,200. Then transaction 1, which is cash from customer. That one there. Then transaction 3 there is credit sales. That is 96,400. Then transaction 5 there is sales return. Sales return 3,800. Then transaction 8 there, of course, is discount claim. Already claimed 600. Then transaction 9, which is bad debt written off, and of course transaction 10, which is set off. All these are items of sales ledger control account, and as usual we'll continue to post them. The unit of account is also there. Now the first thing is that sales ledger account balance brought down, which is 98,200. Sales ledger balance 98,200. The other thing is credit purchase. Credit sales. Credit sales will be by the debit side. All increase in this account will be by the debit side. All decrease will be by what? At the credit side. So return will reduce this amount. Return will be by the credit side, which is 3,800. The next thing is this a discount claim. Discount claim by somebody who is not supposed to claim it, provided it has been claimed. We reduce it. Then bad debt written off will also reduce the amount of debtor. Then I think that is all. The next thing we are going to take a look at is the contra. The contra, which is set off, is always by the reducing side of both sales ledger control account and purchases ledger control account. Then you take the difference, calculate the difference, and get the balance carried down. The balance carried down in this case is the actual balance of what? Receivable, which is going to be by what? The debit side. So balance brought down, that is in the debit side, is the actual amount of what? Receivable for this period. Now, this question asks part B. We want to answer part B as we are answering all these items that are items of sales ledger control account. That question says, what are the sources of the information from 1 to 10? Where did we get information? What are the book of prime entry where we get this information? From 1 there, where did we get information? So we are going to show you where we get the information. The first information there, cash from customer. Everything about cash is gotten from what? The cash book. So we are going to write transaction and their sources. The first transaction 1 now, cash from customer. Cash from customer, the information is from the cash book. The information is from what? The cash book. source of the book of prime entry is cash book. Then the second one, credit sales, that is the second information. Credit sales is from the sales day book or the sales journal, the sales day book. That is where we get information on credit sales. That is the book of prime entry where we get all information about total credit sales. Then the next one is sales return. We get that information from sales return book or return inward journal or sales return word journal. The next information there is discount claim. Discount allow information is gotten from the cash book. There's a column for discount allowed from the cash book. Now the next one is setup. Setup is gotten from the general journal or the journal proper. Then bad debt written off is from general journal or general proper, and contra is also from general journal or the journal proper. So these are the information that the transaction that pertain to sales ledger control account, and there's the book of prime entry where they are originated according to the question. So we have answered item 1, 3, 8, 5, 8, and 9 and 10. We have given the source the book of prime entry where their information originated. Now let us go and solve the other one. The other one, this one now is the purchases ledger control account, and we are going also to bring out all the transactions that pertain to the purchases ledger control account from that question. The first one is purchases ledger control account balance, which is 74,800. Credit purchases 73,000. Purchases return 1,400. Discount received 800, and contra, which is the set of 4,200. So from this one now we are going to prepare the purchases ledger control account. We also have cash paid to supplier, which is what 65,000. So from here we are going to post directly. There's need for us to flow together. We do not want anything that will bring any communication gap. So that is why we need to bring them out here and solve them as if we are solving them differently. We are supposed to be posting here, but as it is now, this is the best option for you to flow along with me. Now, the purchase ledger control account also is also, as we know, a liability account. Increases by the credit side, decreases by the debit side. Everything that will bring increase to this account is by the credit side, and anything that will decrease it will be by what? The debit side. So the first thing there is balance, a purchase ledger account balance brought down 74,800 on the credit side. Cash paid to supplier will reduce it. That is transaction 2. Cash paid to supplier will reduce it, which is what? 63,000. Credit purchases will increase it. Credit purchases will increase, which was 73,000. The purchases return will reduce it. Purchases return will reduce it, and that is what? 1,400. Next item is discount received. Discount received will reduce it. Reduce what we are owing suppliers. Then contra is always on the reducing side of this account. So we now take the total the debit side and the credit side, and fix it different on the lower side to be what? Balance carried down, which is what? 76,400. Now we balance of the total now become 147,800, and the balance carried down is 78,400, which is the actual amount of payable, the actual amount the business is going to pay to creditors. So you bring it down by the credit side, because this account take it balances by what the debit the credit side. No, that's an error. The balance is supposed to be by what? The credit side. Let us change it. Let us change it to the debit side. The balance is supposed to be by what? The debit side. So let us leave it. But that's an error. We are trying to copy it and paste it, or delete it. Please, this is an error. This balance is supposed to be by what? The debit side. Yes, supposed by the credit side. Yeah, it's been corrected. This purchases ledger contract account, and so it's supposed to be by what? The credit side. Purchase ledger contract account take their balances by what? The credit side. That is a typographical error just been corrected. Now the part B of this, say, from all these items, where did you get the information from? What are the prime book that you get information? The first item there is cash to pay to supplier. That information is from the cash book. That information is from the cash book. And the next one is credit purchases. Credit purchases from purchases what? Journal or purchases day book. The next one is return. Purchase return is on purchases return journal or return outward journal. And the next one, which is item 7, is discount receive. Discount receive. The source of information is from the book, the cash book. And contra, which is a set of, the source of information is from the journal proper or the general journal. On this note, we come to the end of this tutorial. We do not want to make the tutorial so bulky. Like it, assist us to share it, and subscribe to our channel. Our next tutorial, which is going to be control account part 3, we are going to solve some professional examination questions on control accounts. I thank you for learning with us. Until then, take care of yourself. Goodbye.